Time for our special segment, Charting Trends. Gautam Shah, founder and chief strategist at Goldilocks Premium Research, is joining us to take some questions. Gautam, good to have you with us here. Thanks very much for your time. Prashant this side. So chart out the trend for our viewers, Gautam. I mean, pretty much at all-time highs. And once you cross all-time highs, I guess the excitement is that there is nothing to go by, right? So in that sense, blue skies is the limit. Is that how you're looking at it, or more circumspect here?
Good morning, Prashant. Well, you have to look at markets in relative, in relative terms, because if you look at it in absolute terms, obviously Indian markets have done fabulously well. We are at lifetime highs, not just on the Nifty 50, but also on the NSE 500, the mid-cap 100, and the Nifty equal weight index. So obviously there are a lot of positives. But on a relative basis, it actually gets better, because if you compare India with the US, India with Europe, India with the rest of Asia, you'll realize that we have started to become one of the best performing markets once again. We had lost this tag sometime in December last year. For about 4 or 5 months, Indian markets underperformed the world. But thereafter, I think this rally has been spectacular. But I think, as I keep saying, and I've been maintaining this stance for the last few months, that our market has really become bottom up. It's not about the index. I know these numbers of 18,800 looks very flashy, sounds great for celebration. But in percentage terms, we haven't done anything special. Yes, we are up 2,000 points from the recent lows, but I don't think we have the ammunition to really gallop past levels of 18,900, 19,000 in a hurry. So the way I look at it, the index and the large caps are going to be quiet. They're going to stay in a range. They're not going to see much upside, maybe because they have run a little ahead of themselves, and also because world markets are in a sort of a range-bound space. But at the same time, if you look at the broader market performance, that's where the real opportunity is. So yes, markets are slightly overbought from a short-term time frame, but they will just digest that by going sideways, and there will be internal corrections from time to time, something that we saw in the 2003-2007 bull market. So the real opportunity is in the broader markets. And if you actually look at the mid-cap 100 divided by the Nifty, or the small-cap 100 divided by the Nifty, those charts have seen massive breakouts, which will lead to continuing outperformance for the rest of the year.
Before we get to the opportunities in the broader markets, the stocks which are breaking out, just quickly, as the Nifty remains sideways over the near term, medium term, what would be the broad range? You spoke about 18,900, 19,000 on the way up, which will act as a resistance. On the way down, where do you see the Nifty headed? Just so that viewers get an idea where to buy if the index heads lower.
Riba, for the last 1.5 months, I think our working range has been 18,000 to 19,000. Now, I'm not a big fan of ranges, but that's what is happening on the charts at this point of time. If 18,670 were to break, you could see a dip towards 18,200 and worst case 18,000. But broadly, I think the market is a sell closer to 19 and it's a buy closer to 18, not necessarily at 18, but closer to 18. But what we've been doing at Goldilocks, just ignoring the index. We're not even watching what the Nifty does on a day-to-day basis and just focusing on stocks, sectors and themes. I think that's really the best way forward, because 2020 and 21 was all about, top down. We looked at the large caps, the headline indices, and that's where the return was. But things have changed.
So let's talk about those, bottom-up themes. Tell us the sectors, the themes, the stocks that you like.
Well, firstly, I think it's been a rally which has seen frantic sector rotation and theme rotation. I think you've seen it in the last 3 months that there is one pocket which does well, and then it, passes the baton to something else. And that's the beauty of any solid bull market, that you have something, helping the market go higher. So as a basket, I think the entire mid-cap 100 and the small-cap 100 look good. In fact, our working target for the small-cap 100 is about 12,000, which is a good 13-14% away from current prices. But if you really want to look at pockets, I think textile as a pocket is coming back very strongly. We like cement as a basket. I think the Ramco Cements, the Ultratechs, the Ambuja Cements of the world, and some of the smaller companies as well. We have started to like fertilizer as well. Some interesting smart moves in the last few days. Auto ancillary, I think, is a very big theme. Look at the kind of winners that you've seen in auto ancillary and the entire auto pack. And the unlock trade, the Delta Corps of the world, the Indian hotels, Sapphire Foods, Devyani International, all of these themes, and not to forget industrials. That's really the big theme, which I think is going to stay from a 5-year perspective. I see a lot of my fundamental friends talking about it, and I think the charts are pretty much aligned to that view. So these 4 or 5 pockets which I mentioned, I feel have the best opportunities.
Okay, all right. Hi, good morning, Gautam. Tell us what a couple of stocks. I believe you have some targets on Rain as well as Rolex. Run us through that.
Yeah, so Rolex Rings, I think, is a company that we've really liked. We've recently covered it. We feel that it has the potential to be a big mover from here. Fundamentally in line, technically absolutely solid on the charts, smart money in it. So we like this stock. And obviously, Rain Industries was the darling of the market in the 2020-2021 period, then lost its way somewhat. But the chart setup again is very solid, and I see the stock also appreciating anywhere between 30 to 50%. So these are just few ideas, that we like to cover from time to time. But the entire structural story is to stay in the in the broader market, stay invested, continue your SIPs, and add on dips.
Gautam, great conversation, but out of time. Thank you very much for joining in. Need to get into a break. On the other side, we'll put the focus on commodities. Stay tuned.